Welcome to Dr. Fred Markets. This is not financial advice. While most people scroll past the noise, a few take the time to understand what's really going on. Finance, crypto, artificial intelligence, this is where it all connects. You made the right choice being here. Let's dive in.
Crypto is now safer than your US retirement account. Not morally, mathematically. This is not financial advice, but here is the truth. US stocks are partying while the plumbing quietly cracks. S&P 500 at 723.77, up 0.8%, pretending everything's fine, while Trump talks about pulling thousands of troops out of Europe, and the Supreme Court greenlights Louisiana redistricting chaos before the midterms. Markets hate uncertainty, and Washington just installed a vending machine that spits out fresh uncertainty on command. Geopolitics is not background noise, it's counterparty risk. A US military drawdown in Europe screams less predictable NATO, which screams more tail risk for US multinationals priced like it's 2019. Yet your beloved index fund just shrugged and climbed anyway, as if artillery ranges and trade routes don't hit earnings per share. Then look at Nvidia, the market's golden child, slipping 1% to 196.5 on a green day for the index. The AI poster boy bleeding while the benchmark grinds higher means one thing: this is no longer an AI market, it's a blind liquidity market. When the generals retreat while the army advances, that's not a rally, that's distribution. Now jam that next to crypto's favorite chaos engine, DOGE. The Washington Post just bagged a public service Pulitzer, in part for coverage touching the federal workforce and DOGE. Let that sink in. A meme coin launched as a joke is now embedded deep enough in the culture that award-chasing journalists slap it into serious narratives to farm your attention. DOGE isn't just a coin, it's a sentiment index for how unseriously people treat money. And while your government is turning politics into a knife fight and media into meme theater, Valve quietly imports 50 tons of game consoles in 2 days. That's not a rounding error. That's a forward bet that people will stay online, plugged in, trading time for dopamine. Consoles, microtransactions, skins, in-game currencies. The human brain is being trained to treat digital tokens as normal money, while the real financial system asks you to trust politicians arguing over maps and troop deployments. Here's the cliff. The US stock market is pricing in a calm, managed world run by adults, while crypto is pricing in a world where nobody is in charge. And right now, Washington is acting way more like crypto than the S&P. Put the three signals together. 1. S&P 500 levitates in the face of geopolitical and electoral volatility like the Fed installed airbags under the entire market. 2. Nvidia, the crown jewel of the AI bull case, underperforms on a green day, hinting the AI narrative is getting tired just as politicians crank up systemic risk. 3. DOGE seeps into Pulitzer-winning coverage, and Valve shoves an industrial quantity of consoles into the global bloodstream, accelerating the normalization of digital tokens and on-chain culture. The conclusion everyone's...
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Too scared to say, US stocks are the real meme trade. Crypto is accidentally becoming the adult in the room. US equities are now a giant Fed-levered social consensus. America will always figure it out. Crypto, especially the majors, is a much simpler bet. Math clears, blocks settle, no senator can gerrymander SHA 256. One system relies on courts, elections, treaties, and public trust that looks more fragile by the hour. The other relies on code and hash power that does not care where Louisiana draws its district lines. When a potential US troop drawdown in Europe barely dents risk assets, that's not strength, that's denial. When the Supreme Court shakes the political table and your index hits all-time highs anyway, you are not investing, you are hoping. Hope is not a strategy, it is unpaid premium on disaster. Crypto's volatility is loud and immediate. Stock's risk is quiet and slow. One slaps you in the face, the other whispers you to sleep while leverage piles up underneath. If you only look at price charts and not the institutions behind them, you miss the real story. The safe system is run by the same people turning governance into a reality show. So what does this mean for you? First, stop worshiping the S&P like a savings account. At 723.77 with political and military risk flaring, you are no longer diversified. You are long American ego. Second, stop dismissing crypto as pure clown world while giving US markets a moral free pass. DOGE getting Pulitzer-adjacent attention is grotesque, yes, but it proves the culture is already priced in. The question is whether you want exposure to the raw meme, crypto, or the sanitized meme, stocks propped up by policy theater. Third, build a barbell. Hard conviction on what clears, major crypto with real security and liquidity, and hard skepticism on what's coasting, US equities that assume stable politics and permanent peace. You don't need to dump your index fund. You need to stop lying to yourself about what it really is. A leveraged bet that the circus never burns down. This is not financial advice, but here is the truth. US stocks are now the speculative side of your life, and crypto is the part that at least admits the world is insane. Decide which lie you prefer. 3-point summary. 1. S&P up, Nvidia down, while DC and NATO wobble equals. US stocks are ignorance premium, not safety premium. 2. DOGE and Pulitzer coverage and 50 tons of consoles. Digital token culture is the new default, whether you like it or not. 3. The real hedge is intellectual honesty. Treat US markets as risky memes, treat crypto as brutal math, and size your bets accordingly. If you want comfort, buy an index. If you want truth, study what happens when the US looks more like a meme coin than a superpower, then place your chips like an adult. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.